Good morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Markets definitely are poised for a cautious start amidst mixed global cues. SGX Nifty indicate a flattish to somewhat now a positive opening for the broader index in India. Dow Jones have posted worst week since June 2022 as Silicon Valley Bank collapse has weighed on the sentiment. The futures, however, have jumped as regulators announce backstop of SVB depositors. The US regulators also have announced plan to backstop all the depositors in SVB and have made additional funding available for other banks. Asia Pacific, however, is trading lower, tracking losses overnight from Wall Street. If you talk about the FIIs, they've sold in shares worth around 2,060 odd crore, and DIIs, however, have bought shares worth around 1,350 odd crore. With that, let us get going and discuss some stocks and strategies today with Gautam Shah, who's the Vice President and Technical Analyst at GM Financial. Good morning, Gautam.
Good morning. JM Financial was my earlier job. I currently am the founder of Goldilocks Premium Research.
Thank you for that. Well, Gautam, I'm going to start off by asking you about the current setup that you're looking at for the markets. Significant amount of sell-off that came in on Friday. Lot of global cues that are coming in over the weekend. What do you make out of it, and what levels can now Nifty be looking at?
Well, I think we are in a spot of bother, no doubt about that. Because I think for the last 2.5 months, Indian markets in general have been in a downtrend. We have been making a series of lower lows. Excuses have come out of nowhere. Initially, it was the China surge in COVID cases, then it was the Adani fiasco, and now these developments around SVB. And I don't think this is going to allow the markets to really stabilize very quickly. Yes, there will be pullbacks from time to time, but I don't think they will sustain, because clearly we are in a weak environment. And the market has not been able to sustain at high levels. In fact, the broad range has been about 17,300 to 17,800. And the market has been oscillating within the same, in the first couple of weeks of March. But I think as we get into the third week of March, I believe that we could see a breakdown eventually below 17,300. And once that breakdown happens, another 4-5% downside opens up. So we would remain and maintain a bearish stance. I really don't see any signs of bottoming out. And, with the way the global markets are placed at this point of time, while there is going to be increased volatility, I think even they could see another 3-4-5% kind of a cut, which will definitely impact India.
All right, Gautam, what do you think the strategy should be today if there is, there are mixed global cues? US stock futures are now indicating a positive start coming in. What is the PCR looking like? Should it be a buy on dip strategy that the investors or the traders should now be looking at? Or should they be on the sidelines till there is some amount of stability which creeps into the market? What do you make out of it, and what should be the strategies that the viewers should be taking right now?
I think the strategy should be to sell on rise. I think that's been the stance for the last couple of months. This is not a buy on dips market, unfortunately, because the market is respecting resistance levels really well. I mean, if you look at how this level of 17,800 worked last week, it was a big barrier and the market hit that number and just corrected. So if you were to see a bit of a bounce today on account of developments around SVB, I think it should be used as a selling opportunity. At the same time, 17,300 is really the line in the sand for the time being. This is a number from where the Nifty has rebounded a couple of times in the past, and therefore there could be another attempt today and tomorrow. But once we break 17,300, then I think one should get more aggressive on the short side. But in case you get a bounce, as I just mentioned, look to reduce longs and look to move to sectors which are like safe havens. Look at PSU, look at capital goods, look at selectively IT stocks. I think these are the three pockets in the market which I think are going to stand out on the long side, and look at banks, metals, pharma on the sell side, looking for opportunities, on the short side.
Sure. Talking about banks here, Nifty Bank ended around 40,485. That was the level probably in the previous session. But what is the strategy right now? Do you expect any support whatsoever coming in from the Nifty Banking Index? Perception is a reality for most of the banking counters, and India is no exception out there. With what's going on in the globe, do you think that will have a bearing even on Bank Nifty?
Well, it will definitely have a bearing on the Bank Nifty. We've seen this over the last couple of decades that we do have some sort of a linkage, and we live in a connected world. So I don't think we can stay insulated with what's happening in the US, and for that matter, even in rest of Asia. So I think the Bank Nifty is clearly the problem. It's been the sector that has taken the market down, along with Reliance Industries, two of the most weaker pockets of the market. Bank Nifty in terms of levels, 39,600 to 42,000 has been the broad range within which the Bank Nifty has been trading for the last 3 weeks. This looks like distribution. I think eventually a break below 39,600 is coming. So again, use any rally as a selling opportunity. Many of the top banking stocks, which have been the solid names for the last couple of years, are weakening by the day. So I think use any pullback rallies as an opportunity to sell. Banks and Reliance put together will put significant pressure on the overall market.
Sure. Banks and Reliance, these are two pockets of weakness, and 17,300 is clearly the mark that one should be looking at. But apart from that, in terms of the pockets that could otherwise, give some returns or probably look attractive on charts, any three bets for our viewers out there?
Well, I think firstly, market has moved from growth to value. So anything that's well valued and I think not richly valued is doing well, and therefore the case in point being the PSU basket. Now look at the PSU index. It actually hit a multi-month high just a couple of days back. I mean, that's enough testimony where smart money has moved in. So in the PSU space, I think we like NTPC, we like Coal India, we like Power Grid, and I think some of these stocks, can give you substantial return and also a good place to hide in a difficult market environment. So PSU probably is our top bet at this point of time. They come with excellent dividend yields. They are under-owned. And, fundamentally, you could build a case for many positives. So this is probably the strongest basket as I see at this point of time. And this would be followed by capital goods. I mean, if you look at the ABBs of the world, the Cummins India of the world, they've done very well in the recent past, no impact of the market correction. So if you want to hide, if you're looking at opportunities on the long side, let it be in these two spaces.
All right, that's the word coming in on the PSU space, but just hang on to that thought and let us just address the top movers of the day, and please feel free to pick and choose from the charts that look attractive within the bunch of stocks that we discuss. In bunch of stocks that we'll be addressing, of course, will be Ambuja Cement, Adani Group, TCI Express, ICICI, Mahindra and Mahindra, Tech Mahindra for that matter. The list is rather long, but we're going to spend more time explaining about Adani. It's increased equity in Ambuja Finance aggregating to 2.65 billion. It's fully prepaid share backed promoter financing, which is aggregating to an extent of 2.15 billion. Promoters have prepaid additionally $500 million facility taken for Ambuja acquisition financing, and overall with this, promoters have infused in $2.6 billion out of the total acquisition value. Also, Ambuja and ACC, they are going to be in focus apart from including the Adani group of stocks. There was a report which came in on Friday, FT report, which suggested that Adani has issued a formal request to the global lenders requesting for selling 4 to 5% of stake in Ambuja Cement. Now, Gautam Adani seems to be keen on selling the stake, and this is valued to an extent of around $450 million. It's a part, of course, the efforts are a part to reduce debt and restore investor confidence. Overall, Adani owns 63% stake when it comes to Ambuja Cement. This was a report that we got on Financial Times on a Friday. But on a Sunday evening, we got a report saying that GQG may actually pick up stake in Adani Cement business. So clearly, some amount of action which is expected to be witnessed in Adani group of stocks, ACC, Ambuja included. Yes Bank, there the 3-year RBI mandatory lock-in period ends today. Expect some selling pressure overall building in for that one. The lock-in period was for individual investors and exchange-traded funds. So do keep an eye out on this one as well. Also, which we're tracking this morning will be Tech Mahindra. Tech Mahindra has announced Mohit Joshi as the managing director and the CEO. He will take over when CP Gurnani retires on 19 December 2023. He's the next Infosys president out there. Tech Mahindra, it's a positive development coming in on that one. But for Infosys, it's the loss when it comes to the president. Big shoes to fill in there. Three position, almost 3 times the presidents in the last couple of years. There has been a void on that position. There have been frequent, vacancy with that when it comes to that position. So retention is clearly a problem when it comes to Infosys. So do keep an eye out on a bunch of ID names as well. SVB crisis, that's going to be one thing that you're going to hear the entire day. Nazara Tech came in with a report, says that 2 subsidiaries hold cash worth around 64 odd crore in the collapsed lender. Paytm clarified that SVB has actually exited completely with profits, and SVC Cooperative Bank actually came in and there's a clarification that it hasn't gone bust because of the name rhyming out there. So there was a clarification issued on that one. In the small cap names, broader index, you'll be looking at TCI Express. Promoter has actually bought in an additional stake, debt-free company, good ROEs, good returns overall coming in for TCI Express. But we'll also keep an eye out on ICICI Bank, where RBI has actually extended time for divestment in ICICI Lombard General Insurance. Divestment has been extended till September 9, 2024. The bank has requested for the extension due to the market conditions. So clearly a positive coming in on that one. Do keep an eye out on this one. So clearly, Gautam, I'm just going to come back to you and ask you about the bunch of names that we discussed. What do you make out of ACC and Ambuja? Do you see some amount of traction building in on these two?
Yeah, I think so. I think they witnessed collateral damage because of this entire Adani fiasco. But I think it was a little overdone more for Ambuja Cements, a stock that we've been liking for a very long time. So I think it's stabilized. It's likely to do very well from here. I see very limited downside. And if you have to take a long-term bet on any stock in the Adani Group at this point of time, let it be Ambuja. I think the 340, 350 area is a very good support. I think it should hold out. And the chances of actually a 20, 25, 30% kind of an upside from here is pretty high. So yes,
sure.
Cement is a story that we like. And aside of ACC and Ambuja, if you look at...
Sure, Gautam. We'll just quickly address the markets and come back to you and resume the conversation when it comes to ACC and Ambuja. Of course, these are going to be the 2 stocks that we're clearly going to be keeping an eye out, as Gautam has suggested thus far. Nifty 50, we're looking at some amount of flat, clearly a flat opening coming in. I would actually say that's a solace coming in for the markets. Not a huge sell-off as was anticipated over the weekend. Obviously, Fed has stepped in to stabilize. Some amount of measures have crept into the overnight when it comes to for the fallout per se for this US-based bank. So that's clearly playing out on the markets right now. Bank Nifty index, let's look at that. Sensex, of course, you're looking at flattish to negative bias coming in on that one as well. But let's look at Bank Nifty. Well, down and out, I would say. Not really at this point of time. Flattish to negative bias, yet looking for a trajectory for that matter. Remains to be seen how does the momentum play out in this week. If you talk about the sectoral indices for that matter, how are they stacking up? Just to see Nifty Metal Index, you've seen that index underperforming for a couple of days. Finally, some amount of positive momentum building in on that one. 1% gain coming in on the Metal Index. And IT, defensive pack has been doing well, 0.8%, 3/4% of gains coming in overall for Nifty IT pack. And Nifty Auto, we're seeing some amount of weakness probably creeping into this one. Yet looking at the advanced declines ratio, just to understand the fair undertone of the market at this point of time, 18 advances versus 32 declines. So clearly the breadth is favoring more in the favor of declines right now. Mid-cap index. You're seeing some amount of losses, 0.2% on mid-cap index for that matter, and small-cap index too. We are looking at losses coming to an extent of 0.1% for small-cap index. So clearly, there is participation coming in from the defensive names, something like an FMCG, something like an IT is doing well. Also, some recovery seen on the metal index. But overall, the weakness prevails. Declines are, advancing declines. We're seeing that ratio momentum right now. The market being pretty much weak at this point of time. But let's actually also pull out nifty gainers and losers out there, and then quickly resume our conversation with the technical side, of course. Tech Mahindra, as we highlighted earlier, Adani Enterprises and Hindalco. These are the top three gainers that we have on our list. Adani Ports, HCL Tech, and JSW Steel. So you have a bunch of Adani names, you have IT names, and for that matter, you also have metal names which have made it to the top gaining list. Apollo Hospital, TCS, and Wipro. These are some of the other gainers that we have on our list today. And let's talk about the losers out there. IndusInd Bank, where there is a reappointment out there. Nestle India, Titan. These are some of the top losers that we have on our list. And also, if you look at more on the losing side, BPCL, HUL, and NTPC. These are some of the names that we probably have on the losing side. But Gautam, I'm going to quickly come back to you and resume the conversation that we were having. And you said at this point of time you were talking about ECC, Ambuja, and the cement pockets. But from your assessment, what do you make out of the markets right now? We've seen some amount of flattish to negative bias coming in for the markets. How do you read into that? And which are the pockets that now look like a little attractive?
Well, I'm sure market participants are very happy with the kind of opening that we've seen today, because nerves were out there over the weekend as to how India is going to open and how Asia is going to open. It's been good so far, but I think it's too early to say that the entire SVB episode has been discounted. I think the charts are still weak. Yes, you keep getting these bounces from time to time, but I don't think one should get sucked into it. Upsides will be limited. The market will find selling pressure at higher levels. So stick to the usual, stay with the defensives. The broader market setup, as you can see today, mid caps and small caps aren't doing well. It's just a bunch of top names that have stood out. But aside of that, I think the structure, the texture of this market is still weak. And as I said earlier, I'm still sticking my guns to PSU, capital goods. I think they should stand out in the overall scheme of things.
All right, something like a Nazara Tech for that matter, or Paytm. How do you read into these charts? Because, they've seen some amount of linkages coming in from that entire SVB crisis aftermath. Nazara said that the two subsidiaries hold cash worth around 64 crore in the collapsed lender. Paytm is saying that the bank is completely exited with complete profits. How do the charts of these two individual stocks stack up right now for you?
Quite terrible, actually. With or without the linkage, they have been in a downtrend all along. So there has never been a reason to really look at them as an investment or even as a trading idea on the long side. We've simply stayed away from them throughout the last many months, not recommending our subscribers at Goldilocks. And I think this is not a kind of market where you want to, catch a falling knife, because we've seen so many stocks, they just kept making lower lows and the news flow kept getting worse. So, while there are a lot of adventurous people who want to take a bet on these stocks because they feel that, they have gone down a lot, but I think there is a lot more room for them to fall, and therefore, my advice would be to stay away from them.
All right, so I would also want to chat about overall, what do you make out of this IT space right now? Do you see some amount of traction building in the defensive space? Probably could those also be the pockets to hide when it comes to the market's volatility? Clearly, we're seeing some amount of resistance building in overall on the rate sensitives now with the kind of collapse that we're witnessing in US. Do you think defensives could be the space to hide?
Yes, I think so. I think I'm a practitioner of relative strength. So what we do is we look at each sector relative to the headline indices, and the IT index has really stood out very well in the last couple of months, while everything else has come off. We like the setup. We feel that once the index gets past 30,300, 30,500, you could see a much bigger rally. And I think all the top names, whether it's a Tech Mahindra, Infosys, TCS, the mid-cap names like Coforge, Cyient, Persistent, LTTS, all have very good charts from a medium-term perspective. So if you're looking to take profits or exit some of the other sectors in the market, top up on IT, I think it will keep your portfolio protected.
All right, that's the word coming in. Top up on IT probably will keep you protected. That's something that we were all probably looking at, because earlier amount of, in the early part of the year, we saw some amount of traction building in for the IT, but the momentum clearly fizzled away. But overall, what do you make out of, apart from these ACCs and the Ambujas, Do you also look at cement basket now looking a little attractive, because probably we're seeing now there are reports suggesting that Adani's might just sell out 4 to 5% stake in Ambuja. There was a report actually, last evening Adani came out with a release of saying that, they have increased their equity when it comes to the overall financing program coming in for Ambuja. So something like a Shree Cement or something like an Ultratech Cement, how do these companies look overall on the charts? Do you see a potential upside for these ones as well?
Yes, they look very solid. In fact, Ultratech has been one of our top bets in the recent past. I think it stood out very well in the market correction, and there is very little volatility. It's backed by institutions. The company has great numbers, and the entire cement story is really intact. If you look at relative strength, Ultratech, Shree Cement, Dalmia, have all done very well. ACC and Ambuja are more like special situations. So, you really cannot put them in the general cement basket. But given the kind of damage Ambuja has seen, as I mentioned earlier, I like that as well, more from a longer term perspective. But if you're looking at trading ideas or investment ideas which are more solid, I think go for the other 3 or 4 names which I mentioned.
Sure, that's clearly the word coming in when it comes to the overall, cement basket per se. But Gautam, how would you look at something like an Adani group of companies now? Because in the last couple of days, we're seeing some amount of rebound coming in all of them, right? You talk about Adani Enterprises, you talk about Adani Ports. They've seen some amount of recovery, some amount of damage control has been done. How would you play stocks as volatile as these ones right now?
See, everyone's trying to bottom fish. Everyone's trying to second guess. This is something that we don't recommend. I think it's almost a game of 7 up, 7 down, the way we see it right now at the markets. And you don't want to be very adventurous out there. There are much more stable and stronger names, to work with. So why the Adani Group? Because I think let the dust settle, let this news flow get out of the way, and then probably we'll look at it. So I am still not the kind of person who is looking for value in the Adani Group after this big fall of the recent past. I still feel there could be more pain ahead, because if my overall market view is negative, the Adani Group will get impacted at higher levels. So just stay away for the time being. And if at all you want to do something in the group, let it be the 2 cement names.
All right. Also, let's chat about the metal counters overall. Something in the likes of Hindalco, something in the likes of Tata Steel, JSW Steel. Early part of the year, we saw some volatility playing out. We were quite optimistic that China reopening will probably mean good news for the markets, including steel per se specifically, where there is the biggest commodity market out there. But how do you look at the charts right now? Because we've seen fair amount of volatility creeping in the commodity names per se. So something like an Hindalco for that matter, how does that look in terms of the overall RSI levels?
They look very weak. I think that's been the case for a month and a half. In fact, from the recent highs, the metals index has lost more than 20%. Look at where Hindalco is right now, in comparison to where it was in November, December last year. Again, there will be small pullbacks from time to time, but I think they will get sold into. Today is a good looking pullback for the metals index, but I think it's an opportunity to sell. So again, the recommendation is to stay away, use this up move to cash out and move to other sectors of the market.
All right, so that's clearly the word coming in when it comes to the metal name per se. But thank you so much for joining us this morning, and we'll get back with a lot more in terms of the technical analysis out there. But clearly, it's a very interesting day out here, right? We've seen some amount of, not a sell-off exactly in the way that was anticipated, somewhat a soft market coming in for the opening, coming in for the market. So clearly, the measures that Fed has overall taken remains to be seen. Like that probably has comforted the markets a little bit and provided the required solace that we're looking at. Look at the charts right now, something like a Nifty 50 index, Sensex, and all trading in positive. In fact, we're seeing some amount of gains creeping into the markets. So clearly that initial knee-jerk reaction as anticipated didn't come through, and there's some amount of maturity even in terms of the trading which is creeping in from the investors. Even if we talk about the small cap index, we're seeing losses have minimized a little bit from where we were, but it's that time of the show where we address the fundamental story for you all, and the impact and the decoding the entire aftermath that has come through. And for that, we have Deven Choksey, who is the Managing Director and overall of KRChoksey Holding Private Limited. Good morning. Nice to have you with us, Mr. Choksey.
Good morning.
All right, so what do you make out of it? Indian markets tend to look at West for cues. Perception, as you know, in the banking system, or at least seems to be a reality. Do you think SVB collapse has any bearing on Indian equity markets? Over the weekend, we've seen flooded with news and inquiries when it comes to, the whole fiasco around the crisis. With this, and that there were a couple of reports that SVC Cooperative Bank also came with a clarification, Paytm clarification, Nazara clarification, but markets today have opened in green. What do you make out of this overall development per se for the Indian equity markets?
So once again, good morning to you. Well, I think my first point here is that the SVB collapse is largely due to the asset liability mismatch. As a result of which, I think the regulators out there has immediately stepped in and made sure that the depositors are allowed to take their money back. Once this particular situation is taken under control, the run on the bank would probably impact would get minimized. That is my first point. So the depositors are now pretty assured as far as I think they receiving the sum of money in concern, including the advance dividend that they are talking about. On the other side, the impact has to be coming on to the lending book of SVB. The lending book, which is largely driven by the private equity investments that world over this bank has lent money to, they are basically, I think, now going to be questioned about returning back their money in a due course of time. I don't think they are going to put aggressive foot on the pedal as far as recovery of the money is concerned. They will be given sufficient amount of time to recover that money. But that does mean that the flow of new money is likely to be a little bit more circumspect than ever before that one has thought about. So given that kind of a situation, there is going to be some amount of pressure onto the money that the money has been lent to the private equity firms. Within that, India horizon included. So some of these companies will be required to recapitalize themselves, or they have to raise new, fresh money from other corners. This is what my sense is. As of now, I don't see any big impact coming in, including the sell-off in the names which you have mentioned.
All right. So clearly, also, how do you look at the overall Indian bank state? Are they well insulated? Are there any links coming out, interconnected links that we could look out, overall coming in on account of this crisis? Or you think they still remain to be in the healthy state and there is nothing per se to worry when it comes to Indian banking system overall?
No, overall Indian banking system is far more resilient. And I think RBI has been doing a splendid job. So due credit should go to our regulator for the kind of work that they have been executing. More or less, there is a good amount of transparency, disclosure of non-performing assets. Even if I think there is a slight less amount of irregularities, I think the matter has to get reported to the regulator. So our regulator probably has, I think, played a very systematic role. Plus, by design, we have kept the banks insulated. In one particular area or the sector, I think overexposure is not allowed. At the same time, I think there is a resolution process in place when I think the investee company or the companies which borrowed money has taken money from the bank. I think there is some IBC process is already in place. So all in all put together, my viewpoint is that RBI has been playing a very proactive role. I don't see too much of an impact coming onto any of the Indian banks. They are far more vigilant this point of time.
Sure. And how about the startups in India? Do you think they may feel a bit of SVB jitters? We saw Paytm actually coming up with a clarification. As you say, you don't see per se any sell-off coming in on account of that, but Paytm had to come out with a clarification that SVB has fully exited by marking in handsome returns. What do you make out of counters like Paytm? They've just turned profitable overall on the operating level. Do you think there is more steam to this one?
Well, I think they better make profit on a sustainable basis. And I think that is what we are all looking at. Come September, as the company has made an announcement that they would be beta positive. So should that be the situation, then definitely I think one would like to see how it sustains. Various properties of Paytm, be it transaction property or the fintech property or the mall property or the distribution platform, all in all put together, I think they need to generate sufficient amount of cash on a sustainable basis. Should that be happening? In my viewpoint, I think the kind of apprehension that we have I think would probably get addressed in a systematic manner. But as of now, it is slightly earlier call. I would keep an eye on it. I think for how exactly they get into this. Maybe the change in the business model, which I believe that I think is extremely important. Maybe Paytm kind of a fintech company getting integrated with some of the larger banks, probably I think to get I think the distribution going faster. At the same time, acquiring the customer on a retail side. Should that happen, then I believe that I think it would be a win-win combination. But these are all wishful thinking. I guess I think we'll have to wait and see how things pan out.
Mr. Choksey, how, on a very aerial view, how do you look at markets overall? How are you approaching it? Because we're seeing higher amount of geopolitical uncertainty coming in. We are in a scenario of higher interest rates. We're looking at anemic growth. FII's trends haven't been that encouraging at this point of time. You know, there are bulk of mega deals when it comes to even the Adani group of companies. With that in the setup, how do you look at markets right now? And also, how do you approach a bunch of group companies like Adani Group, something like an ACC, Ambuja also for that matter? What's your assessment overall on that one?
So overall, our markets are absolutely very, very strongly positioned as from the fundamental point of view. Most of the companies to whom you talk to have a visibility of around 24 to 36 months in form of revenue, which means when you have got 8 to 12 quarters worth of visibility about revenue and the profit, definitely I think this makes life much more easier in I think predicting the market and the market movement from the point of view of investments. Now comes the other angle, the other than investment angle, which is a trading angle. Today, majority of the global funds who are operating in various parts of the world, including in India, they are traders. They come through the ETF routes. So from that particular route, I think the only thing that matter to them is the amount of inflow of money and amount of outflow of money. If stronger is the inflow, then they will pump in more amount of money into the markets by increasing the weight into probably some of the index stocks and some of the large cap stocks. And if there is a smaller inflow or I think withdrawal of money taking place, then reverse of that definitely happens, which is currently being seen. Because of the increase in the interest rate from virtual zero rate of interest, I think to 5% rate of interest today in the Western markets in America. I guess I think this is where probably I think larger pressure has started coming onto Indian market, including other markets on technical side. Because those countries have never seen 5% kind of return coming from banks for ages. And today, I think these countries are providing 5% kind of return on the fixed sum basis. So they are probably going to shift big time into some of the debt-oriented products and probably I think give money to that. How exactly it will sustain, whether it will create an excess, how exactly I think they'll recover that money when they lend it to their borrowers. These are all some of the questions which the time will tell. But coming to India market, in my viewpoint, I think India market remains extremely strong proposition. Though the FPIs are selling for the reason which I explained to you, I believe that I think the inflow of money from the domestic source through mutual fund SIP as well is remaining pretty strong. And I would think that I think this is probably the time for many of the funds to accumulate stocks at lower levels when the foreigners are selling.
Okay, Mr. Choksey, one last question that I'd like to squeeze in here would be about Adani Group of companies. There is a lot being said and done by the group of stocks, of course. In the last couple of days, we've seen recovery coming in. There was this prepayment coming in when it comes to the debt picture. There was a, in the last GQG, marquee name like GQG checking in. Of course, 2 days before, we saw the reports surfacing in where they spoke about GQG probably now picking up stake in something like an ACC Ambuja and Adani selling off 4 to 5% stake in the cement business. What do you look, how do you approach these counters right now, and overall, even for the cement space, how does that look to you right now?
A very important question that you have raised. The group companies, Adani group of companies, this year would be making an operating profit about 54,000 crores. And you have a net debt of around 2,75,000 crores. So in my viewpoint, if you are basically generating the profit at the rate of 20% growth, say 54,000 crores becomes 80,000 crores to 1 lakh crore in say, for example, 4 years time, and you are repaying that particular money for retiring the debt, then frankly, for this kind of infrastructure business, the amount of cash flow that you are generating will command extraordinarily high amount of premium. because no businesses, I think, no businesses, I think, would give the visibility of cash flow generation like infrastructure businesses does. And that is where the most of the sovereign fund, endowment fund, insurance fund, pension fund, kind of long-term funds who are investing for 25 and 50 years, they would jump in and they would probably buy these stocks. Fortunately, in Adani group of companies, I think most of the infrastructure assets that they've built, they are profitable, they are cash generating, and they are promising to grow even bigger. Second point, if India has to attract long-term investors in form of the funds which I mentioned, I think Adani Group probably offers the best amount of proximity to invest into India infrastructure story. And that is where I also believe that if the assets are available at a cheaper price, the buying will come, whether I think they will be bought by X fund or they would be bought by, I think, some sovereign, the large funds. I guess I think this buying will come. So in my viewpoint, I think I remain fully convinced about the infrastructure potential and the story that Adani Group is unfolding. As far as cement businesses are concerned, both ICICI and Ambuja, they look absolutely, I think, convincing business. They are strong businesses. They are cash-generating businesses. If India is spending 10 lakh crore in this year, last year they spent 7.5 lakh crore, and overall, in next 10 years, if you are spending 110 lakh crores in infrastructure, cement would be one sector, I think, which would probably be the one which would probably make the best use out of this particular spending of the government because a lot of construction activity is taking place. In my viewpoint, ICICI Ambuja remains absolutely convincing story. Adani Group has strategically fit in this story. On one side, they have got the limestone mine. On the other side, they have got the distribution reach to the ports, railways, roads. I guess I think this is where probably they are better placed comparatively. So corrective price or the downfall in the price, they remain attractive proposition at lower levels for investors.
Right, Mr. Choksey, 40 seconds on this one. Clearly, what do you make out of overall IT space? Because we've seen some amount of rejects happening coming in on Tech Mahindra and Infosys, right? The former president of Infosys is now the managing director and CEO for Tech Mahindra. How do you look at this development and how do you view overall IT space? Do you see more amount of risk-reward ratio coming in for the IT space overall? How do the valuations look right now? Just 40 seconds on this one, if you can. We're completely out of time at this point of time.
I'm fully convinced about IT. I think for every 1 rupee of product development, 2 rupee of services are required. So Indian companies are definitely, I think, well positioned. And I think experience is saying that whenever the managers are hired from outside, they have built the companies very, very strong. So I would remain reasonably optimistic about the possibilities at Tech Mahindra.
All right, Mr. Choksey, we'll leave it at that. Thank you so much for taking out this time this morning and speaking to us.
Thank you.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. For the rest of the updates, you tune in to moneycontrol.com and Money Control app.